This is a 1-5 trade. This would have been a beautiful trade. Nice break of trend line, respected key levels, respected fibs. This was all confluences. This would give you that nice lot size, nice profit.
All right, folks, here we are on Trading Up. We've got Jose Fernandes in the house. We've just done a fantastic podcast. If you want to see, hear something different from my typical podcast in terms of podcast guest and a way to trade that's going to blow your mind, hit the link under this, but not quite yet. You want to watch what he does on a price chart first. He's going to break down a trade on NAS100. In fact, we're going to go through a back test, and this is how he trades intraday, not as scalping, but as intraday trades. And, you're definitely going to learn a thing or two. So welcome back to the show, Jose.
Thank you. Let's get to it.
Folks, if you're looking for a prop firm at the moment and you want someone who's been around for ages, flexible, reliable, and has low profit targets, then check out my sponsors, Blue Guardian. So these guys, I've been trading with them for the last 8 months. They've been sponsoring the show for about that amount of time, and they even have guys on my live stream trading them as well. So what I've found is their commission seems to be lower than some of the competitors out there. So really great trading environment, and they offer now CTrader and some other fantastic trading platforms as well. If you want to check them out, there's a coupon code in the description, or just use it, Trading Nut, all one word, and get 10% off at checkout. There's a QR code you can grab here as well. All right, folks, let's get on with the show.
As I mentioned before in the interview, I start out on my 4-hour time frame to get my bias for the day, if it's going to be a sell or buy. And as you can see, I keep my chart simple. It's just price selection. And as you can see for NAS100, we have broke the uptrend. And me as a intraday trader, at this point, when I see has broke this trend line, I'm looking for sells. And first, I drew my trend line. Then I want to draw my key levels. The key levels are like the line chart for me to see where the bounces happen. And I'll start by marking the key levels right here. Another key level right here. This is literally how simple my trading as gets. Then I go back to my candle pattern, my candle chart, and I go on my 1 hour time frame. And I'll draw my trend line again, because I'm looking for sells. My bias for the day is sells on NAS100. And after I put my trend line, I'm going to see how it reacts to each key level. And the 4 hour, as you can see, there's also a demand. You have a demand respect. And if you place a fib, see this retracement, it has touched the 0.78. That's a reversal zone, and it has respected it. It closed right back down as soon as it hit. There's confluences. So we have 3 confluences: the demand, the key level, and the fib. So that's 3 confluences to confirm that we should be expecting sells. Now moving to 1 hour. We got that level price right here. That's well respected. Our first sell confirmation. Now we need a break of trend line on the 1 hour. Now that we have our break on the 1 hour, we're going to wait for a retracement back. So I'm going to need a retracement. Now that we have a retracement coming back up, I'll go down my 15 to 30 minutes. And here, I look at my key levels. The blue line is my key levels where I look to take trades. And right now I'm looking for sells. And I'll look for other confluences to draw my levels. So 1 hour, I'll go 1 hour to draw my fibs to measure this retracement. And I'm looking for a retracement around this area for me to place my sells. And on the 15th, You're just looking to see when the price gets this level right here, see the reaction of it. So when we place it, we're not getting in until we see a reaction from that key level. Okay, now that it has touched that, you can see we added retracement. Let's pause it. Take it. Play it back. As you can see, this is it has touched the key level. This is where we needed the price to go for we start looking for sells. And now that it closed right back in this resistance, this was a fake out. We would enter our trade at the break of this low right here and place our stop loss above this blue key level right here. Because that's if it breaks above that, we shouldn't be expecting no sells. Because that's a 4-hour key level. That's a very important key level. And for our TP, and TP we would measure from the retracement. And this is a 1-5 trade. And once you get your entry, you go on your 15 minutes, you start monitoring your trade. And as soon as you see a new structure being created, you go break even. Because at that point, if it breaks above that structure, that trade is invalid. And the TP, I usually target the 0.27, the negative 0.272. And as soon as it makes a new structure, you go your trade and break even. This, as you can tell, this is also an M formation. See the information that retested on the neckline. So there's no need for you to let the trade come all the way back up to your stop loss. So you would go break even, let the trade run risk free. And this would have been a beautiful trade if anybody had taken it. Nice break of trend line, respective key levels, respective fibs. This was all confluences. This what gives you that confidence to put nice lot size for a nice profit when everything's adding up, making a beautiful picture. Yeah, and that's it.
And do you move like your stop loss again if it were to get to a bit further down in the trade? Would you move it again at any point from break?
No, the only place I put is either break even. That's it. I don't.
That's
just for clear.
And the funny thing is, so that break of the trend line is literally key for you in terms of getting that trend. Because a lot of people will be going, well, currently on the 4-hour, it's in a small uptrend. Overall, the trend's up, but the trend line break is for you the key thing, isn't it, on that 4-hour? And is there a reason for that?
No, the trend line, when it's happening on a 1-hour time frame, you should expect it to move a little bit down, even if it's a fake out. And being an intraday trader, I'm just looking for that small move. I'm not trying to catch the whole swing. So that's why I break a trend lines most of the time. It fits nicely with my confluences.
And if you go back to the 4-hour chart just for a second there, I just want to find out. So what about if so it broke the trend line, and at that point on the bigger 4-hour trend line, you're like, okay, yeah, I'm looking for sells. Now, what would make you look for buys again on this market?
As soon as it violated the 0.7 on the fib, you see this right here? This level?
Yep.
As soon as it closes above that, I would start looking for.
Okay, right. So it's the fibs key there. Awesome. Hey folks, what a view behind me. I'm at BLACKBULL Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at BLACKBULL Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at BLACKBULL Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Thank you very much for sharing. That's fantastic breakdown for anyone looking at a Confluence trading strategy. Now, before you wrap up, what's the best way for people to get hold of you?
On Instagram, Jove TP, JOVETP.
Okay, folks, what we'll do is hook up a link to not just that, but also his interview as well below the video. What's he clicking on around down there? Hit subscribe, like, and that notifications bell, and we'll see you in the next one.